this is the trade that I should have taken that actually would have ended up losing me money. So, first off, why was I looking for shorts? Well, first thing we had this low and this low, both 4-hour lows, both in my opinion the obvious targets. We had, it's very difficult to see, but there's a 4-hour high here, and then like this is the rest of the liquidity. So there's not much buy side liquidity to aim for, and we do have 2 points of relatively strong sell side liquidity to target. We've been in a very strong downtrend. We've inversed this gap. We've closed above and below this low. Or I actually, at the point of that trade on the 4-hour we hadn't, but I think we were, yeah, we hadn't at the time, but pretty much we'd inversed all this, and we'd been, this is the hourly, you know, this is very bearish. So just off of like target wise, you know, what's target, we're bearish, and then pretty much straight away, just well before market even opens, we have this like wick to the buy side, which ends up taking all this hourly liquidity, which, you know, this had already filled this imbalance, so and hit equilibrium as well. So this is equilibrium, imbalance. I know it's the previous day, so it doesn't really count, but it's just to show how, you know, what sort of downtrend and how the market is moving. And this is the manipulation. So from there, yeah, I was definitely bearish going into market open. So all I was looking for was some sort of continuation of the trend. We had that on the 15-minute time frame into market open, as we had both these candles closing below these lows here and here. Yeah, I then, that also on the 5-minute was breaking structure. Oh my god, I can't speak. Breaking structure to the downside. So 1 minute for the lower time frame confluences. We created this imbalance for our market open, so I wanted us to tap into this and then break structure to the downside for me to be able to enter, which is exactly what we did. Sadly, I was not like on my phone checking. I was busy, I was working, so I couldn't actually look at this. I was outside. I'm pretty sure I checked my phone as I'm pretty sure I checked my phone actually. We tapped into this imbalance with this candle, and then we had this candle as well. And then I waited for some sort of breaking structure. We created this candle, and then there was like 10 seconds left, and we were all the way up here somewhere. So I put my phone away, and then when I checked back at it, we were, I think, up here again, and I couldn't go on my phone for a good 10 minutes. So we're back up here. I'd missed the trade. You know, it is what it is. So I left that. Didn't hit the trade, which is kind of lucky because, yeah, we would have ended up losing money. And, well, so my stop loss barely got wicked, but it's what it is. I would have set it 2 pips above this high. I didn't want to go all the way up here because that's almost 30 pips. It's ridiculous. But 17.8, which looking back at it, I still think it is the right trade to take, even though, yes, we did lose it, but I'm not bothered at all, to be honest. I think it is the correct trade to take, and, you know, we just got a little bit unlucky with this liquidity sweep. So this is basically why I have the 2 pip like extension, because on 90% of trades that, you know, that are in this downtrend, yeah, so if we're in this downtrend, we just consolidated and come up, which is this bit here, taking out these highs, come down, and then come back up again for the entry confluence. So that's us coming down, and then up here is like, you know, whatever, the 1 minute imbalance. And then most times, let's say there's some sort of high here, okay, and people set their stop loss right here. If we come up and we sweep out that high and then we go lower, you know, that's just going to wick a load of people out. But a lot of things people don't realize is that majority of times when you do get wicked out in such situations, it's very, like, it is barely, you know, it is by not even a pip most of the time, and people get stopped out for no real reason. So that's why I'd set it 2 pips above. So in 80% of the cases, I wouldn't be stopped out. And this is just one of those cases where we would have been stopped out. It's not the end of the world. It is what it is. I'm not too bothered. Like I said, still happy that I thought this is how the trade would have went. As you can see, we're in New York session now. Reason I'm not looking for a trade is because there's nothing to really target down here. Like, now, if we look at this, what is there? You know, there's nothing. Like, there's all this liquidity to the downside, which is kind of just simply too far away. If I keep the cursor in line with it, yeah, you can look how far down it is. We're not going all the way down there. This is just a wick. This is a low. Yeah, we're not taking out this. You know, it's just pointless looking for sells because of the placement of liquidity. There's nothing really to target, and then looking for buys now, I would say, is probably slightly more viable, but it goes against, well, not only does it go against like the consolidation, manipulation, reversal, and then continuation, so we should be continuing to the downside, so that looking for longs is obviously going against that, but we also just have a lack of targets quite simply as well. Like, all the liquidity isn't that strong. Like, if you look on the 4 hour, it's a lot more obvious because you've got this high, and this one high here. And then it's just like a line. It's very support and resistance looking price action, which I just don't want to trade, so I'm not trading. Yeah, that's pretty much it, explaining how I should have taken this losing trade today, which doesn't make much sense, but hopefully that's good enough explanation for you.